Welcome to another Loopring video. We are discussing the LRC token and we are looking at statistically significant moving averages, as in we're looking at data, how to trade the Loopring token. Why are we looking at LRC? Because it is one of the top performing cryptocurrencies in the last 24 hours. It's the second best performing crypto. Loopring is currently performing quite impressively. It's now at market rank 76 with a market cap of $1.2 billion. And the interesting thing about Loopring is that also its circulating supply is currently at 97%. So there isn't a lot of additional token inflation happening, something that's relatively uncommon among emerging altcoins. So what is this backtest about? What is this simulation, this data all about? What are these charts here all about? The fundamental idea is that you want to time the market for volatile altcoins such as Loopring. This is a historical chart, right? When we look at this without the logarithmic scale, so we just look at a very standard price scale over here, we can see these enormous spikes and these enormous crashes. But even when we look at this on a logarithmic scale, where the same distance is showing a percentage change, not an absolute dollar change, we can still see this massive volatility. The top here in January of 2018 all the way to the bottom was a 99% decline. Okay, so when you've got that kind of a volatility, I really think you should consider timing the market. Buying and holding crypto project that you're fundamentally bullish on might in general be a good idea, but when you're facing such kind of price swings, it really feels hard to just stay positive, right, during such a move. But the momentum has somewhat shifted since beginning of 2022, right? And what was an incredible destruction of capital then became an incredible rise again, right? This is 4,500% gains since the bottom. And so how can we time this? We can buy whenever the price is above the moving average, right? We can sell whenever the price is below. The question though is, what kind of duration for the moving average should you take? Should you take, say, the 50-day moving average? Should you take, say, the 30-day moving average? What's historically actually the best when looking at Loopring? And without stretching the content too much, without going into too much fluff talk over here, this is the result of the backtest. I have backtested both the simple moving average and the exponential moving average. So we can find out what's actually working better in practice. When you go here to tradingview.com and you click on indicators, you can add either, right? You can just add the moving average or the moving average exponential. They are slightly different in the way that the exponential moving average weights the recent data a bit more. It has a recency bias to a certain degree. And so in green, we see the backtest result of the simple moving average. In yellow, the results of the exponential moving average. On the x-axis, we've got the duration of the moving average in days. And on the y-axis, we've got the annualized performance had you followed such a strategy. So buying and holding Loopring over this entire data set, right, over this period here, it would have given you annualized a bit over 75%. Trading according to the moving averages would have almost in every case outperformed buying and holding. So it almost doesn't matter too much what kind of a moving average you take, but you can optimize this. The best moving average is this one over here, right? So this would have given you more than 200% per annum. So that's around 230% per annum for the simple moving average. Note that the simple moving averages, they tend to outperform the exponential ones. So you can just keep it simple. This kind of an observation is pretty consistent with other cryptocurrencies as well. We can see the same in Ethereum, in Bitcoin, in other altcoins. So it's no surprise to me that the SMA is actually better performing than the EMA. So again, the idea is you sell whenever the price is below, you buy whenever the price is above. Now, did I include trading fees here? Yes, I did. So I looked at where is Loopring trading actually the most popular. So when we go here to coinmarketcap.com, we click here on market, we can see where the trading volume is high. And I have worked with the trading fees of Binance. Now, the Coinbase trading fees are way higher. So be aware that your mileage here might vary, especially if you are exposed to short-term capital gains taxes, right? So the taxes are not included in this backtest. This is simply assuming that you've got an ideal setup, you use a cheap exchange with 0.1% trading fees. That's what I've used for Binance. There are rebates, there are discounts if you trade often or if you've got very high volumes that you move, but I've simply worked with 0.1. The results will be different if you just use Coinbase, right? Coinbase is way more expensive. So the 36-day moving average it is. When we look at the price over here, right, that's the 36-day. And so currently we have just crossed this again. This is a bullish signal. But there is one more thing, and that is very, very important to note actually. There are sometimes failed signals where we come above the moving average, then below, then above again. I've simulated this in a way that we simply just look at the day end price. So we are not going to trade in and out whenever we are moving above and below this moving average within the day. I just look at the price, UTC midnight. Are we above? Are we below? When we are above, then we will follow the price. When we are below, we'll be outside of the market. So you would be buying over here. In this example, you would be buying high, right? We just crossed. And then we would be selling low over here. So you would have made this kind of a negative trade, minus 16% roughly. So that's not something you want, right? You don't want the price to always go above, below, and then potentially have a lot of bad trades. They're not just bad because you buy high and sell low, they're also bad because you get all these trading fees. And so what you can do is you can put a buffer around this, right? You can say, I only want to buy once we cross a certain buffer here, and I only want to sell once we cross a certain buffer below the moving average. So you would be completely passive when it's just moving within the buffer zone. Only when it goes above the buffer, you would buy. Only when it goes below, you would sell. So you would, in the end, trade less actively. Now, when you follow such an approach, right, when you've got a certain percentage range here where you stay inactive, where you don't buy and sell, what kind of a buffer zone would actually be ideal, right? Can we also backtest this? And yes, of course we can. Of course, I've done exactly that. So you can further refine this. We don't just buy and sell according to the 36-day moving average. We also include a buffer over here where we are completely inactive and we don't buy or sell if we haven't yet crossed that buffer. Now, how many percentage points buffer from the moving average should we actually take? That's this result here. That's the backtest result. So that's the buffer shown here on the x-axis versus the annualized return if we trade according to the 36-day simple moving average. So we're now taking the best simple moving average and we are applying a buffer filter to this. And how much buffer should you take historically? That's this point over here, 6.5%. So no buffer at all would have given us this return. Then if we just take a little bit of buffer, we would actually underperform slightly. Then once we are, say, between 5% buffer and 10.5% buffer, we outperform, and then everything above this, we again underperform. So we need to take a buffer somewhere between 5.5 or 5% to 10 or 10.5%. That's our green zone over here. That's a better performance than having no buffer at all and buying and selling all the time. So the best buffer is 6.5%. And that's then where in the end you get this kind of an outperformance. So that's the backtest result. So when times are bullish, when the price appreciates, we completely follow the price movements. Note, I've made this backtest with a starting capital of 10,000 US. So this capital would have gone to more than 100K with this rally. And then afterwards, the capital got completely destroyed, right? This is here the 99% bear market. But look at how our capital line here moves. I have not implemented any kind of DeFi returns you could potentially get during this time, right? So I've only included the bearish case, the fees. When you're outside of the market, you could actually still slightly appreciate over here by, for example, depositing this into Anchor for 20% per annum. I haven't done anything like that. I just assumed we are completely in cash. That's it. But when we look at this, right, a 99% destruction for buying and holding. But when we look at our capital line, of course, initially we did get quite a bit of a hit. But since then, we pretty much stayed flat. We did have our failed trades, of course. But in the grand scheme of things, while here we got an entire destruction, right? This is a logarithmic scale. So each horizontal unit over here is a 10x. While we got a more than 10x decline here, right? From here to here is 90% decline. From here to here is maybe another 50%. So while we got all of this decline with buying and holding, we didn't have this with this timing strategy, with the 36-day simple moving average plus buffer. But then once we get outside of this bear market, once we tend to appreciate again and we are back in the bull market, that's when we also join that bull market. We sometimes even get a bit less volatility here by not being in the market doing these drawdowns, right? This drawdown here is way larger than this one. And so this is how we get the outperformance. We avoid the crashes. Also the recent one over here. So when did that crash start? Let's look at that. That was also a pretty scary decline of 80%. Right? In just 111 days. We haven't seen that much of a decline with our strategy. There was still a bit of a decline, right? Let's see, that's maybe here from maybe this kind of a move. So that's probably this over here, right? So we would have still seen 40%. That's no fun either, but still that's way better than the people that just bought and hold got. So why do I tell you all of this? Because Loopring is currently in this very, very interesting situation. We are now above the moving average, above the statistically most significant moving average, while the distance from that moving average is currently 13%. So that's more than our 6.5% buffer that we require in order to be bullish. So that's good, right? We are not bullish that often. Not all of those trades work perfectly, right? Look at this. We were in the market. We got a bit of a bullish price action. Then we got the crash. In the end, we went out with plus minus zero. So by no means are we going to have only perfect trades here. And by no means does this 100% support that we have to go up from here. But just based on statistics, just based on what has worked in the past, this is a pretty encouraging signal. Now you do have risk here, right? So the potential risks that you're taking, the potential place where you might want to at least set a mental stop loss, probably not a real stop loss in the system, because then you would also get stopped out within the day. But you might want to sell in case we close, say, below 73 cents or so, right? Then this would again be a failed trade. From the current price, that would be a drop of around 18 or 19%. So that's your risk, 18 or 19%, but your potential gain, right? Let's say we really get an extended bull market over here. The potential gain is very, very high, right? So this is now 280%, something like this. So there is a pretty good risk to reward. And so it really now depends what's going to happen in the next few days. Where is this overall direction going? The statistics say it's positive, but of course, nobody knows for sure. If we just look at this, say in the last 3 months, it's always dangerous or potentially a risk to buy when trading volume is comparatively high, right? There is a correlation between trading volume and price. When trading volume is high, the price tends to be high. When trading volume is low, the price tends to be low. So whenever you're buying, when the trading volume is high, the price is high. And currently the trading volume in the 3-month time frame is comparatively high. So this could also definitely turn around again and you might lose. So this is definitely a risk to take here. You need to be comfortable with losing potentially 18%. I would even say that the likelihood that this will happen is probably higher than the likelihood that we will go to the moon here. But given that in case we do go down, the loss is so much smaller than the potential gain, this is probably a bet with a positive expected value, even though it might not work out. If we zoom out here, right? If we don't just look at the trading volume in the last 3 months, but in the last year, we have seen way higher volumes. That's basically what you're speculating on. You're hoping that this is not just a little fluke, but that this will accelerate further and that this will go into the stratosphere. That's in the end your potential risk to reward. That's in the end the hope that another rally for Loopring is just starting and that this outperformance that we have seen in the last 24 hours is just a wake-up call for new participants entering the space. If you're trying to time Loopring using moving averages, this is, in my opinion, your best bet. Take the 36-day and take a bit of a buffer, namely 6.5%, and trade according to that. Of course, this is only a mathematical exercise, right? Do your own research as in fundamentals. don't just follow one single YouTube channel, but I hope this is additional information that you haven't yet been aware of that you can use in addition to all your other research that you're doing. Now, if you haven't yet subscribed, do this for sure, because I publish videos regularly. And of course, a like on this video would be appreciated as well, because that will help the channel grow. Now, there's also a public Telegram group. Feel free to check that out. Simply search for Bitcoin Strategy Channel. Make sure though that you don't get scammed. There are people that impersonate me that message you directly after joining here. So that's not me. Make sure that you're not going to send any cryptocurrency to somebody that messages you directly over here. I don't message anybody directly. Now, this is just one backtest of many that I have done. So there's a premium membership. The link is in the video description. It's thebitcoinstrategy.com. So if you're interested in how to do such a backtest, if you want to get the Excel sheet where I've built the backtest for Loopring, if you're interested in having a similar backtest for another altcoin, can also ask me that in the premium Telegram channel. So there's dedicated discussion happening here in the premium chat. So simply ask me here. I do a backtest almost every day for the premium members. So there's definitely still capacity for your request. So feel free to check that out, the premium membership at the Bitcoin Strategy. Last but not least, you definitely want to check out the other Loopring video that I've done in the past. It discusses more fundamentals. It also discusses other aspects of relative valuation to Bitcoin and Ethereum that you definitely want to consider. See you in that other Loopring video. Bye-bye.